Hello, one Paul here. Today I'm going to give you guys a pretty simple strategy. Now this is kind of, I don't know if I mentioned this one before, but it really, I figured the strategy out by looking at the Ghost Market Pro indicators. And the Ghost Market Pro indicators is how I figured out the whole 90-95 strategy. And doing it again, I looked at it again and I found another pretty powerful strategy. It does involve the 90-95, but instead I also put in the 5 and in another indicator, and it works really well. Uh, you'll know exactly the good moments of getting in trades, where the direction where it's going. But for this strategy to work, you kind of have to get a good overall idea of the overall direction. So what I would suggest is looking on the 6 hour and looking at the last couple candles and seeing if the last 3 candles are the same, if they're big directional candles. And if you know the direction, then you can focus and use this strategy and apply it on kind of any time frame you want. But today I'm going to be using this strategy for crypto. We're going to look at it, see how it works. First thing what we're going to do is we're going to analyze the overall direction, and then we're going to apply this strategy. So it's pretty simple. You don't have to have Ghost Market Pro to make this work. You just need to you'll need to plug in some extra indicators. If you don't want Ghost Market Pro, you're going to have to plug in 4 indicators, and I'll show you which ones to do if you want to do that. But if you do Ghost Market Pro, you're only going to need one. You'll need 2 indicators. So it saves you 2 indicators basically. So it'll work both ways. But let me just show you guys how to set it up. Okay, so to set this up, basically, see right here, I have Ghost Market Pro, and I also have a moving average of 5. And I only put the moving average of 5 because I wanted to make sure the color was different. That it was just a solid color. That's the only reason. But first, let me show you how to do this with Ghost Market Pro. How to set it up. Now, if you don't have Ghost Market Pro, if you don't want it, I'll show you. First, let me just show you real quickly what you would need to get if you don't want to do this with Ghost Market Pro. First, go to your CM. We're going to go to CM. You're going to go to CM EMA trend bars, and you're going to be putting in 5, 90, 95. So you're going to click CM. You're going to click CM EMA trend bars. You're going to click it 3 times, and you're going to put in 5, 90, and 95. And that'll get it set up like it is here. But if you do want Ghost Market Pro, basically you'll go to your swing. Now this is a paid indicator, but basically if you want to check the 5, check the 5. But I have it on a separate. Indicator because I need a solid line. But anyway, you can check that one, and then all you have to do is go down here and check everything off except for the 90-95. So that sets you up with the 5, the 90, and the 95. And then the next thing you need is your difference of 2 moving averages, which is, so you want to go to difference of 2 moving averages. You'll get that one, and you'll select your inputs to be 13 and 48, which is one of the most popular methods, the trading methods. It's one of the first trading methods that I came across. But anyway, this strategy is pretty simple. You basically got to get a good general idea of the overall direction. And so I have this on the 6 hour, and you basically just want to get a good idea of the overall direction. So right now with Bitcoin, the direction's going up. The overall, it's going down right now, but the overall direction's going up. But it's pretty, you could kind of tell right here that Bitcoin is bumping its head against this. It's trying to break through. So right now it's going down because it's trying to break through a support level. So because of that, it's going down. So the trend is down. The trend is going down, but overall it's going up. So which direction you want to focus on? Which direction you want to focus on right now is down because it's rejecting the 67,000 line there. So right now, because the candles are weaker, the direction is down. So just get a good general idea of what direction you want to go. And the next thing you want to go is you want to go to a smaller time frame. So what you want to look for, since you have your 5, 90, 95, you want to look for a cross. So basically whatever time frame that works for you, we want to focus on a cross. So we're going to go to a smaller time frame. I don't like going too small, but here's a 15 minute here. So perfect time to enter this trade. Now, for it going up, we see that the 590, 95 crossed right here. So what you want to look for your entries, you want to look for a cross with the 590, 95, and you want to make sure your difference of two moving averages is also doing the same exact thing. So what this strategy does is you get in at the right time when it either starts going up or down, but it will not, if you're entering into a consolidation zone, it won't, you'll be in a consolidation zone. It won't help you in a consolidation zone. So if you find yourself in a consolidation zone, what I would do as an optional indicator here is I would pop in the consolidation zone indicator, and this will help you kind of see when it's consolidated. So those are moments where you really don't need to get in your trade. But so when you find something that crosses, you need to make sure that everything line up. So whatever time frame you wanted to do, you identified the direction by going at the longer time frame. So what you want to do is you want to go to a smaller time frame, and you could go to the 15-minute, the 5-minute, whichever one you want to do. And you want to identify a cross, basically. So you want to look for the 5, 90, 95 to cross, and that's your moment to get in. So you have the consolidation indicator there just to help you out, to let you know that it's consolidation and it's not really a good time to get in. But you want to look for a cross. We see that happening right here. You could have got in right here on a long, and you could have rode this out all the way up to here and been in profit here, or profit all the way here. But right now, from us looking at the 6 hour, we know that it's getting weaker because it's bumping its head up here. And now the trend is going to be starting to cross down. So we want to keep our eye on it if it crosses down with the 5, 90, and the 95. So let's look at a couple time frames and see how well this actually works for, on an intraday basis. So we looked at this one right here, and right here we see a bunch of consolidation. So we probably wouldn't have got on that one. But right here you see another one. You see crossing here. Could have got in for this one and wrote it out here to here, and you'd be in profit for a short right there. Bunch of consolidation right there. And then you see it crossing again right here. You see it crossing up. See, this would have been a good entry point for a long. You could have come in here and rode it all the way to the top. And you could have been in profit there. So that's another profit zone. Now, when you're finding your entry point, and I didn't bring this up yet, you want to make sure that when it crosses, you also see that your 1348 is also pretty close to mirroring what it's doing here. So right here at the cross, we see that the signal is still getting weaker. So this could be a good trade if you see that happening with the EMA difference here. But let's look at some other ones to see if we got some examples here for some more intraday results. We see it crossing right here. So this would be our entry point. And you also see it happening. You see the entry point is turning up on the zero line. So this is a good entry point. There's no consolidation being pointed out. So this would be another good scalp. And you would have made some profit there. So with this strategy, it'll work on a 15-minute, but you can also do this on longer time frames, like the hour. The only thing is, if you do this on the hour, the longer you go in time frames, the better your results are going to be, but the longer you go in time frames, the longer you're going to have to wait. So like right here, we saw it cross. We saw it cross right here, but you would have had to wait a while for this move. And depending on if it comes back down again, you'll have to wait a while for it to cross back down. So the longer you go in time frames, the longer you have to wait. Let's just see another example. Okay, so for this example right here, we're on the hour. We're on the hour and we see the cross happening, the 590.95 right here. We also see it lined up with the 1348 here. So this is a perfect entry because everything is lined up. So if you came in here and you wrote it out, you would be in the profit zone right here, so that's good. So there's going to be big ones and there's going to be small ones. It just depends on what time frame you want to do, but you do have to overall understand the overall direction of what it's doing. So right here we see it crossing. This is a short one. If you rode this out, it took a little over a day and you would have made some profit there. So this works really well. It works on whatever time frame you want to use. Definitely, if you want to make daily profit, definitely focus on a 15-minute. You could do it on a 15-minute if you want to do intraday. If you want to do longer, you can do it on the hour. Find it on the hour. But real quickly, this will also work on moments like when the bull run. Let's check the day real quick, because the day is something I really look for. The day is something I look for real well because you will easily spot the time to come in. Like on the day right here, you see the cross, and you could have rode this entire thing out and be in profit for many days, but it would have taken a while to see that cross, but you would have made a lot of profit right here. So you see it when it crosses, and you could just basically ride it out. So the disadvantage of here, the longer you go in the time frames, the longer you're going to wait. But the longer you're going to wait, the more profit you're going to be. So it's up to you guys if you want to make intraday or if you want to wait longer. Let's real quickly look at this on a weekly basis. Now the results of this on weekly is not going to be, but this will probably work well when we're into a bear market and a bull market, or the signal when that's going to happen. This is easy for that to find that. So when the bull run happened, it was right here, and you could have rode that out for weeks. You could have rode it out for weeks because the cross happened right here, and you could have rode it out. So it depends on whatever time frame you want to use, but this works really well. All you have to do is wait for now me personally, I like doing it on the hour. I think that's a good number to do. You don't always have to look at the charts all the time, but basically find the cross and find the cross on the 590.95, and then just make sure it's matching with the 1348. So anyway, this strategy works really well. To make this work effectively, you first have to identify the overall direction and then go with that direction. So whether it's going up, you can go against the trend with this, but I personally do not like doing that. So first you gotta identify the overall direction. You could do that by looking at the 6 hour or the day, or just get a good general idea of where the overall direction is going, and then you focus on that direction. And then you can go to whatever time frame you want and scalp the moments. If you want to do a lower time frame, you definitely have to find moments of when the 590.95 is crossing. And but the lower you go in time frames, the more you'll run into consolidation periods. When you focus on longer time frames like the hour, you won't find consolidation as much, but if you go lower, you'll run into a lot of consolidation moments. So you got to stay cautious of that. And also, you can punch in the indicator with the consolidation zone. It'll help you find the moments when things are consolidating, and you just stay away when that happens. But anyway, guys, if you like this strategy, I will be going over this again with the stock market and some of the other assets. If you like this video, make sure you hit the like button, hit the subscribe button. I'll see you guys in future videos.